In today's energy markets, we're going to focus on natural gas. Natural gas expiration today for the December contract. We're rolling into the January contract, which will be the lead now starting tomorrow. Looking at the activity on that January NGF19 contract, we're seeing a big pickup in volume. Currently about 258,000 contracts have traded today. Again, so we're seeing a spike as we see rolling of positions from the December into January and also into February and March. We're also seeing a pickup in activity on those futures as well. So again, there's significant activity as we roll into this expiration cycle and into what appears to be a higher range when you look at natural gas prices. Up once again today. We're seeing demand for the natural gas futures lifting the market across the board. January future up 8% currently, trading around that 464 level. So again, upper end of the range, and the level I'm looking at is that November 14th high I saw, which was 496.4 on that January contract, hovering just below that, but we have seen quite a volatile session today. Once again, partly due, I think, to the rolling of positions due to expiration, but also just some of the demand and inventory and demand constraints that we're seeing in the pipeline as we move through this extraction period. Looking at some of these factors that I'm pointing out, let's look at them. Certainly one thing to point out is the reduction in the inventory. We're going into the extraction period. Last week we got a big draw. The 134 number came out last week, a negative draw of 134, so that's a much larger number than the market had anticipated. We get that announcement from the EIA tomorrow, again expecting another fairly sizable draw in natural gas, so that could keep prices elevated here as we move through this early extraction period. Also some other issues that the market's focused on, I believe, and when you look at the regulatory issues, we've got some things going on in the East Coast. When you look at pipelines, we had some fines initiated over the last few days. When you look at some of the bigger pipelines, Energy Transfer Rover is one of the pipelines. The other pipeline is Sunoco Mariner East 2. Both were levied fines, and I think that's continuing to make it very difficult for these pipelines to get online and limiting their build out, and that's why we're seeing again natural gas gyrating around significantly, because the expectations were these pipelines were going to be finished at a certain point in time, and now they're running into some regulatory issues. Also, I want to point out the Atlantic Coast Pipeline. They just got their permit pulled, and that's going to put that pipeline on hold for a time being. Another disruption in what's taking place on the East Coast to try to get this natural gas out of the Permian Basin, out of the middle of the country into other markets. And again, that's, I think, partially responsible for this gyration in the price movement that we're seeing in natural gas. And finally, I want to point out the weather structure. We continue to see greater demand in the East Coast. Now we're seeing some moderation of temperatures in central and west the U.S. right now, but ultimately we're still seeing outsized demand, or it appears to be outsized demand heading into that second week in December right now. And again, I think that's another factor that why we're seeing natural gas prices holding up here at the high end of this range, and certainly the highest level that those prices have seen in quite some time.